TGIF, everybody. NFP, thanks for being here to react to the reaction with us. How's everyone doing today? TGIF as well. Everyone see my screen? Hi, Sinatra. Okay. I know I'm the boy that cried wolf, but check out the NASDAQ 100. Second non-confirmation, pretty glaring divergence here. I'm not saying this is a high, Paul. You know, we could blow, I know some people talking 15,350. It's another couple handles from here. And, you know, people talking 4465 and the S&Ps. S&Ps are not confirming on any time frame.
You saw the DSI overnight, right?
Was 90?
92.
Yeah, well, you know what's more important than divergence? Friendship. Happy birthday, Stel, to you. Happy birthday to you. You became an author this year. May you sell 1 million books. Happy birthday, buddy.
Thank you, Dale. It is tomorrow, but there's no face tomorrow, so thank you in advance, everybody.
Yeah, that's why I did it.
Thank you, thank you.
All right. So we're having a contest. Yeah. Aren't we, Blake?
Yes, we are. Well, it's not my contest. It is Ryan's contest. I mean, I'm just along for the ride, man. I think this is fun.
Isn't that nice?
The winner gets a date with Ryan. Is that
Hi, guys.
Hey, Ryan. So, Ryan, you know,
that's worth more than money. All the money in the world, still.
What's that?
I was saying that's a date with me is worth more than money can buy.
Yeah, guessing the number on the NFP. So, Stel, we appreciate everything you do for the company and how you help people. And
I love you. I love you all I do.
You know, if you want to see a great, you want to be inspired by someone who's overcome adversity, watch the interview. I interviewed Stel yesterday. Great interview. So anyway, I left inspired. So what do you think, Blake? I mean, I heard some people on CNBC that think we're going to get the numbers because, you know, a lot of 26 states have stopped the supplemental unemployment insurance. And so she thinks that, you know, people are coming back to work. And then I read something yesterday that some of these states that have discontinued it, it hasn't increased people looking for jobs, which I don't know what they're living on.
Well, you know, Dale, you make some great points, but I mean, ultimately, you know what it comes down to?
What?
It comes down to how bad of an NFP guesser I am. And I guessed a very low number. So chances are we're going to get a berserko strong number today. So
they're looking for 8, right? 800.
Yeah. Okay. Ryan, do you know what the exact number is?
They're looking for?
I think it's 870, right?
870 on Reuters and 858 on Bloomberg. So pretty much around the same number.
Got it. Well, so you know, the market's expecting a pretty strong number, and I came in with a really low number, and I'm not joking. I am probably one of the worst NFP guessers in the world. I'm a reactionary NFP guy. I just basically plan out what I'm going to do ahead of
markets. Well, what do you think, Blake? Would you sell dollar strength if we had a good number?
No, if we have a good number, I'm getting long the dollar. There's no, I'm already long dollars against some currencies from this week, and I'm, you know, in nice
short Aussie.
I'm not short Aussie. I did short it yesterday at 74.06, and I closed it out around the 74-cent level, and I should have held it overnight. I just, you know, I had other dollar exposure. I'm long the dollar Norway, dollar Mex, some dollar Rand previous to that announcement yesterday, which just I was really fortunate that I was. about the finance minister leaving. And so I'm long dollars with stops at break even.
Okay.
I'm adding to all the dollar longs.
Well,
on
it
a
looks like a
strong number
number
today.
could resolve a lot of things. Like, is the euro going to break down? Is gold going to break down? You know.
Yeah, so I think one of the biggest things here is, and this is my chart of the day yesterday. And Ryan, I'm gonna let you jump in here in just a second. But it is gold. I mean, gold is the big deal to me, and this is gold is gonna tell me what to do. I mean, like I said, I'm long the dollar, and if I get stopped out for break even on what I have, it's fine. I've already pulled profits, and but I'm going to come back to gold, as I was just saying to you guys, just so you guys can see what I'm doing. Been picking up the dollar Mexican peso at the 80s, right? Along the support. We get any type of risk off, this thing's going to go higher. The S&P is at all-time highs again this morning. If the S&P drops 100 points, the dollar Mexican peso will be trading above this resistance. I have no doubt about that, in my opinion. Okay. Dollar Norway. This is a big cup and handle pattern. That's the breakout. We completed the cup and handle. We're testing the breakout point. I'm long in the 70s. I bought it, and I already bought the bottom this week, and I'm taking some profits. The dollar rand, I picked this up. This is earlier on a descending wedge breakout. I bought it here at 14. Well, I actually bought it here at like 1436. I was a little late to the party. And, I took some profits yesterday, and then I've got my stops basically at 1436 now. So and this, by the way, was this right here, as you can see, was a 50% retracement. So I was buying it into that fib. I was thinking we're going to hold there. So anyway, now being long the dollar, I have stops at break even. I don't mind, and I don't mind adding to everything either, because if it is a strong data, or it is a strong number, you have the NASDAQ that is at all-time highs. The DSI is extreme. You have S&Ps that are all-time highs, and DSI is pretty lofty as well. Any strong data, let's say it is a inline print, or we print 1 million jobs, that's gonna weaken the stock market. The stock market doesn't want to see too strong a data here. The stock market really would love to see a weaker print. And my opinion is if we have a headline number that comes in, not too weak, but let's say it comes in at like 600,000, the market's going to rally to new highs. That's my opinion. But there's more to the market than just the headline number, isn't there, Ryan?
Yeah, that's correct. We've been speaking about the important part being the participation rate, because that's going to show the true reflection of how many people are coming back into the jobs market. As we've been saying, we've seen this big gap between the JOLTS reports and the number of vacancies and the number supposedly still unemployed. Until that meaningfully starts collapsing, let's say, there's still questions going to be asked. So you could get a fabulous NFP number and the market will zoom off, but you can still see the unemployment rate rise because the participation rate has risen. That in itself is good, because it means, all right, the unemployment rate's up, but more people are looking for jobs now. They're coming into the market. But if you get a big beat on the number, say, and the participation rate drops and the unemployment rate drops, that's not such good news, because there's less people coming in. There's more people coming out of the market. So the participation rate is always important to look at when we're in these sort of terms, when judging the unemployment rate. Wages still not a big concern at the moment, because they're still a bit messy with all the jobs numbers and firms chasing workers. So I'm expecting wages to perhaps keep trucking higher, because these firms are chasing people with higher wages, but they won't become a real effect until there's many more people in the jobs market.
So, and as we would expect moving forward, that participation rate is going to be even more important as you're pinching off every government is trying to pinch off the this
Support,
stimulus, and support that they've been. It's like pulling everybody's binky when they're a year old, something like that. Anyway.
Brian, what would explain, because I did read a few articles that said that despite, and this is only the supplemental, the extra 300 a week that the Fed, plus what they were paying to independent contractors that normally don't receive unemployment benefits because they're not categorized as employees, they pay their own Social Security. So if that's the case, that even though they're pulling the binky, as Blake says, and they're dropping out of the workforce, that's very negative that they're dropping out.
Yeah, I mean, I'm not 100% clear on all the programs the US are doing. I think a lot of them are done through tax incentives or tax breaks of some sort to firms.
No, they were sending checks.
Yeah, as well as sending checks as well.
Yeah.
So the question is, these firms that are getting this support to support workers, what happens when that support dries up? Have they got the business there to then stand on their own 2 feet, or are they going to, get to the end of the lifeline and say, sorry guys, despite the lifeline, we've got no business, we can't move forward, we're shutting down, going bankrupt, you're now fired, and then that chucks more people on the unemployment list, which again is the big thing that we're looking for around September here in the UK when our furlough scheme ends.
Interesting.
And what the government's doing here is they're paying at the moment, I think it's 80% of wages of a firm. So the firm has to pay 20%, and that went from 10% to 20%. They're trying to scale it down so firms are paying more, but it's not a complete light switch of support off. But that ends the end of September. So again, our firms living on lifeline going to get to the end of that and think, right, I've got no business, you're all fired, and boom, up we go with unemployment again.
Yeah,
it's gonna be. Go ahead, Dale. Go ahead.
I never thought of businesses were profitable as long as they were getting a supplement from the government, and if they're not, without it, because they have to pay 100%, they may not want to stay open. Exactly,
and the thing, this is what the Fed's worried about when they're looking at jobs. It's not what's happening now; it's what's happening when all that stops. Because and that's why I keep, what happens now to me isn't really important. What happens in October, November, December, when we see the aftermath of these programs, that's when we'll know whether what's going to happen with monetary policy. Are they going to taper QE massively, small, or keep it in even? If unemployment suddenly shoots up to 6.5%, and the participation rate's dropping, that's a big problem. Yeah, will the Fed taper into that, Blake? I don't know.
I don't know. I mean, that's to be seen. I mean, I don't know. What are your thoughts there, Ryan?
It's difficult because if inflation's still high, they've got a big problem, because now they're losing potentially the additional consumer support to the economy because people are becoming unemployed. So activity drops on the consumer side, and meanwhile you've still got high inflation. That's the pickle, and that's where the big stagflation risk comes in for next year.
And I don't, you probably hear it all the time from analysts, whether you hear them on CNBC or Bloomberg or wherever you listen to these guys and gals. They all say the same thing, but I have to agree. The Fed's kind of in a box here, and they put themselves there, and it is going to be difficult, or it's going to be difficult for them to get out. But more interesting to me is I'm going to just grab some popcorn and see what happens, because it's going to be a show to see how they actually come out of this.
Exactly.
I think I was going to say, I think every time you look at the central bank and you're like, wow, how are they going to get themselves out of this mess? I think I probably said that at least, half a dozen times, like seriously, like, not like out of my mouth, like thinking it over the course of the last 20 some odd years. How's the Fed going to get themselves out of this pickle? This is probably the biggest one that I've, obviously ever witnessed. And I think everybody else has too. right?
Yeah.
So,
but then let's not, it's easy to focus on the negative sides, and we should, because it's a risk for us as trading. But let's look on the positive side. If numbers do come back, if firms aren't going bust and they're now standing on their own 2 feet and paying workers, and we get the bottlenecks issues resolved, which will help pricing. But employment is coming in and it is growing strongly, and wages are going up. That's a big boost for the economy. That's a secondary kick that we might see.
It's a huge swoon. We are on the really on the cusp of a huge economic boom if things work out the way they expect.
Yeah, and it's a tale of two extremes, really. I don't think there's going to be any middle ground. You're either going to see unemployment dropping and going negative and becoming a mess, or you're going to see this big boom come in because all the workers are coming back in. You're getting the jobs, you're getting the wages are being spent, and the economy kicks on. And then we'll be going straight to, they'll be tapering as fast as they can, and we'll be talking hikes in the second part of next year potentially.
All right.
If we get to 2023, those expectations will get ramped up. Bond yield, we'll see US 10s probably north of 140 again. Dollar yen will probably be up over 111, 112, who knows? But it will be another monumental shift in pricing and expectation if that happens on the positive side.
Ryan's better than Stuart Varney. What do you think?
I don't know who that is.
Who's Stuart Varney?
Yeah, I don't know these.
Oh, he used
Dale,
to be an anchor,
you're at least 140 years old, so you're going to lose us on a lot of these.
No, there was television.
we don't watch it television. We only watch YouTube, guys. So
is he a soap star?
Varney.
Yeah, I mean,
Google him. You'll remember his face.
Was he on Hee Haw or
no, he was
Sesame Street or something?
Financial guy.
Stuart Varney.
All right, hey, on Fox.
I know who you're talking about.
All right. Anyway.
We're just harassing you. Hey, really quick, I'm going to cover just a couple of things because we do have jobs data in 13 minutes. Stelios, I wasn't even sure if you were going to be here this morning because of the fires that you guys are experiencing in Greece. So, hope you guys stay safe and, put on a ventilator, a respirator, not a respirator, put on a mask. To keep from the.
Are they close to you still?
Not to me, but closer to Steve.
Okay, hey,
okay,
guys, let's cover some of these currency pairs really quick.
Right.
Just because we I want to talk about first of all the sterling. Okay, the sterling we have. I think the sterling's holding up really well. A pretty strong move this week, and it's despite the dollar holding up as well as it is. I want to say the dollar index as a whole, the cable has really got a nice bull flag developing. So, worst case scenario is if you have to chase it above 140, you're talking about a move to 140, 150, which would be actually an 88% retracement if you want to see it. That's going to take us right up there. I think this is a very, very bullish pair if the dollar gets whacked today. So if we have a weaker number and, the dollar gets, run over, stocks hit all-time highs. We have the S&P surge towards, 4450 and beyond right here. If the S&P starts making its move towards the 161% extension, dollar should get whacked. And that means the sterling is going to go higher. And, risk appetite is going to be really strong. The Aussie, is still in a bear flag pattern. This is one that if it is a strong data, like we have a gangbusters number, you might get at first the Aussie perk up a little bit because risk appetite. You'll see stocks probably spike higher on a good number at first, but then the stock market will probably reverse. And as traders go, wait, the Fed's going to be a little bit more taper happy, and then the Aussie might push up and then down. As long as we stay below this 74.20 to 74.40 level, that's still a bear flag. So you can see a tale of two different currencies dealing with the dollar right now. You got the sterling that's bullish, the Aussie, which is bearish, right? Still dealing both against the dollar. So I think they're both technically set up for two different outcomes, which is great. That's what we look for, right? I try to choose a I'm guessing that we're going to have a weak number. Stocks go to all-time highs, but honestly, I don't know. And I need to be set up for either situation. And I think the sterling and the Aussie set up for either situation, right? Weak number. Yeah. Weak number, you're buying the cable, strong number, you're buying the or shorting the Aussie. All right. Now let's turn our attention to the dollar CAD. The dollar CAD, we have Canadian jobs, and Ryan and Stelios, if you got some things to say about the Canadian jobs report, let me hear it in just a minute. I just want to show everybody the technical setup. All right. So the dollar Canadian has been acting really weak, and I'm surprised because crude oil's come off of its highs. I expected the dollar Canadian to actually be closer to this support right here, which is, in my opinion, a neckline. And let me just draw it for you guys. And I'm going to remove this here. A neckline of a big middle finger pattern, or the big PP pattern, or the head and shoulder pattern, whatever you want to call it. It does look like I know everybody's mind just went into the gutter. Get your mind out of the gutter. Okay. So, I'm sorry. I saw Austin Powers, and then I started thinking, "Get in my belly." Sorry. So anyway,
was that a self-portrait? That one?
What's that?
Was that a self-portrait? That one?
That was totally no. It would have been like this. No, I'm just kidding. I'm joking. Okay, all right. Sorry. Anyway, back to the analysis. We have a flag pattern. It's set up. Also, so we have a flag pattern and possible head and shoulder pattern. So while we're below, let me go back over here. While we're below 126 and a quarter, so right around this level, you have to be very careful with longs. I think that's the best way for me to put it. In the event that we get above 126 and a quarter, that becomes bullish. Now we have, obviously Canadian and US data as well. So you could get a double whammy in one direction. You could get price action nullified from two, opposing pieces of data. So there's a lot of things that can happen here, but I want to say that we are setting up as a bear flag. We are setting up as a bearish head and shoulder pattern, and really a move below, 124 and a quarter, or you could just call it 124. I think that'd be bearish. And then you have to throw crude oil into the mix. I mean, crude's, weakening. And I think if crude breaks back below like $66 a barrel, it's going a lot lower. And then, then that means the dollar Canadian is probably going to end up going a lot higher. But I'm kind of leaving the dollar Canadian alone after playing it off of the support the last week. Not earlier this week, but, last week and a half, basically. After playing that on the long side, I've kind of been leaving it alone the last several days. So do you guys have any opinions about Canadian jobs reports, the Canadian numbers today? Sorry, that's what I meant to say.
I'll just throw something in quickly if I may, and then I'm probably going to hop and get ready for the numbers. But it's pretty much a similar situation for Canada. Watch the participation rate, see if more jobs are coming in. One thing they do have is they give the split between full-time and part-time. And it was a big set of numbers last month, but the majority of those were part-time workers. And what we can see is what I call the full-time, part-time roundabout. It's like a revolving door. So, last month, part-time was up a big chunk. It may switch the other way this time. What you want to see to show good trend growth in Canadian jobs, you want to see full-time growing as a trend, potentially with part-time growing as well. If they're both moving in the same direction, both trending that way, then you've got a good trend to look at. If it's up and down one month to another, it makes it a bit more messy.
Thanks, Ryan. And I know you need to bolt out of here because you're going to be pushing out all the numbers in our chat rooms, on your social for Forex Flow and ForexAnalytix. So we'll let you go ahead and get to the numbers. Thanks for being here today. I know everybody loves to hear you, and have a great weekend. Thanks for being here all week.
Yeah, good luck trading it to everyone. Have a good weekend.
Thank you, bud. All right, Stelios, any ideas or any thoughts on the dollar Canadian or Canadian jobs number going into today?
I don't have anything to add. I mean, it's all about quality of jobs, probably more than quantity of jobs. So I agree 100% with what Ryan said. And if you remember we had a couple of big negative prints. Last month was positive. It's still chopping around, one way or the other. I don't see a clear trend, so I really don't have any conviction, I'm afraid.
Got it. Okay, thank you for your input there. Now I want to talk a little bit about the dollar yen. Dollar yen really, I thought a break below 109 was going to bring in, a little bit more selling. We spent a good amount of time below 109. I mean, we were, broke through the support. We, were below 109. Then I think this move happened in, I want to say it was in Asia, or maybe it was right after some data. Oh, no, it was the data.
Statement.
It was
statement popped it.
Yeah, it was the it was, if I'm not mistaken, this is the week ADP strong ISM. That's what it was. Week ADP on Wednesday, strong ISM. And so we ended up getting a false break below the 618, then a rally back. The good news is the dollar yen's got a good, I know we've been talking about it here on, on the morning edge, which is for the ForexAnalytix community. Yesterday, we noted 110, being the key resistance going into today, which again is this trend line right here, right? So if you're, as long as you're below 1010, it's okay to be bearish, but a break above 1010 is, or I said 1010. I don't know where that came from. It's early. A break above 110 is going to be bullish for the dollar yen. Also, you should keep in mind what's happening with yields. If this is a strong number, you're going to get yields strengthening here too. And if yields strengthen, that's going to just reinforce that view that the dollar yen should be breaking higher. And Stelios, before we head into the number here, we got just a couple of minutes. Do you have any opinions about yields and about where the bond market's at right now? And I know you're always like, hey, stocks are really going to move once yields start to move, but we have the 10-year that's come off the 200-day moving average again after making new highs. How do you feel about the bond market right now?
There's still no change in direction, unfortunately. It's still strong, and until the point where the market actually realizes and probably freaks out that, hey, tapering is coming soon, and hikes are going to follow and all that. Until then, I don't think the 10-year is going to go anywhere. I want to be short bonds, treasuries and bonds, and I've been saying this for a while that I want to see 178 in the bond, which I think is coming, and that's where I'm going to start shorting. 10-year treasuries, I want to short as well. I haven't decided on the levels yet, but I think not yet, but we're getting close. And like
I beat you to the game.
Oh yeah, you did. Yeah, I know. It's okay.
just so you guys know, the boons are at a big confluence of the 161% extent, or 618 retracement and 88% retracement. 88% of the October 2020 move to the lows, right? 618 of the 2020 highs to the lows. So anyway, that's why I beat you to the. I can't believe I beat you to the.
We're gonna have two patterns in play, short bonds, I think soon. DJ says bad print market up, good print market up. Sigh. Yes, unfortunately, that's how it is. But I say this, and I've said this for a while. Once yields start moving, I think we're going to see a proper leg lower, because at the moment, even if numbers are bad, good, bad, it doesn't matter. It's incredibly cheap to borrow and to get leverage. So people just do it, and it's and I get it. So
yeah. So and here's the thing. Again, I'm going to reiterate, as we get closer to, well, a strong number, I think, is going to be bearish for stocks, and as we get closer to tapering and removing monetary policy, the market is becoming more sensitive. I don't think it's a good number market rally is bad number market rally. I think the market does rally on a slightly weaker number, and if it's a stronger number, it's a strong number. The market might pop initially, but I think it fades. If not immediately, it'll fade throughout the course of the day as the market reassesses. Hey, tapering's coming, and winter's coming too. All right, so let's. That's a bad joke. That's a dad joke. That's all right. We have Data Flash, which is integrated into ForexAnalytix. It's almost as quick as Bloomberg, guys. Remember, I ran a Bloomberg terminal here for you. for the last 5 years or so. And, matching up to data flash is pretty damn close. So we'll be looking for the data here. I'm going to put it on the dollar yen because I think this is going to be the most sensitive. It is a 5-minute chart. Remember, weak data, cable's probably above 139.50. And then, strong data. Well, here we go. Strong data. Dollar yen's liking it. So that means the Aussie is going to be a week going lower. So just heads up there.
943. Okay, it's strong.
Wow, that's a good piece of data.
Oh, unemployment 5.4%.
Wow.
Participation rate up 0.1 as well. So that's the good data. Average hourly earnings 4% year on year. Yeah. Inflation is everywhere.
What's that?
I said inflation is everywhere. It's not just products, earnings are going up. So
yeah. So hey, the thing is, guys, is I think we're gonna see a continued hold on, I'm just canceling some orders. I just sold some Aussie right there at 80. I'm just getting rid of a couple of things here. I just sold the Aussie dollar at 80 just a moment ago as we pop right back up. I'm gonna be adding on a move below 73.50 because 73.50 is where the flag pattern starts to play. So I'm just kind of, getting myself in right now.
Canadian data also missed employment and unemployment rose. So that.
Oh, wow. So that's interesting. Huh. All right.
So the participation rate was good still?
In Canada, let me check.
No, I mean in the US.
In the US, yeah, it went up 0.1%. So unemployment going down, participation rate going up. That's what you want to see.
Okay.
All right. All right, guys. Well, hey, I'm gonna let you take over, Dale. Good luck, everybody, with the rest of the day. Thanks for joining in. The dollar Canadian actually looks, really strong here. I guess strong US data, weaker Canadian data. We are getting a little bit of a push. All right, guys, I'm going to let you take over. So good luck today.
Thanks, everybody.
Good hunting, Blake.
Right. Thanks, guys.
Stel, team, Charlie Gasparino, welcome back to F.A.C.E.
Thanks for having me. My voice is a little, phenolic here, but,
Yeah, we'll just get straight to the point then.
I'll be all right. It'll get better as we talk.
Okay, Charlie. Pretty good number we just had for the NFP. What do you think?
So the story the lead story in the journal right now is not the pretty good number.
What is it?
It's COVID variant threatens recovery. Okay. I think the media, in my view, is downplaying the inflation threat in a major way. I mean, I talk to CEOs all the time. Can you see me, by the way?
No. You
How
have
do
to
I
hit the video.
All right, there we go.
Okay, Charlie. Good to see you, buddy.
Good to see you guys.
Were you at a baseball? How'd you lose your voice?
Well, just so you know, I got a rapid COVID test and it came back negative. So I was in Saratoga last weekend. I came back and there's a lot of colds going around. Let's face it. I mean, this is like cold season on top of Delta variant. Okay. So I was literally running 6 miles and I got the call and I said, if I got Delta and I'm running 6 miles and I felt pretty good, then, the virus is like taking steroids. And it turned out it wasn't Delta.
But there are, okay, so you want to start there. I don't know what to believe about breakthrough cases, Charlie. I mean, I don't know if it was propaganda or what, but I saw this video coming out of Israel that was saying that the majority of their patients in the hospital are fully vaccinated people that are coming down.
I don't know. Listen, I can just tell you what I know here in the U.S., and I know from a really good source. My brother, he runs the ICU at Brooklyn Hospital, which is a community hospital. It is the most vulnerable population. It's heavily minority and working class, and all the problems that go along with that.
Yeah,
everybody in his ICU is unvaccinated. He hasn't seen a vaccinated person, and that's got to the level I need to be hospitalized. So I am telling you, And look at that. Look at the thing. I mean, listen, I'm sure there's anecdotal evidence all over the place, but when you looked at the precipitating event for the mask mandate by the CDC was some issue in Providencetown. It was a huge party.
Yeah.
Nobody was. Look at the numbers. They were all vaccinated, and nobody was hospitalized. Barely anybody got sick. They tested positive. So
like Lindsey Graham had the flu because he was vaccinated.
He said it was mild. He said it was maybe a little more than what I have now. I feel perfectly fine. I just have nasal drip and it hurt my voice. But right. I'm just saying that I think the vaccines. Listen, as a reporter,
so why so much fear? The fear being pumped up to just get people to finally capitulate to take the vaccine, Charlie?
Here's the problem. I think this has become incredibly political.
Yeah.
And the president and the Democrats are so political about certain things that they actually give credence to the people that are anti-vaxxers and give them a voice. For example, the mask mandate, the exaggerating the threat of Delta transmission when you're vaccinated, basing the mask mandate on that Providencetown thing, which was, in reality, a non-event because no one really got sick. They tested positive for the virus, but they didn't get sick. And so when you have that type of politicization, where you have governors and mayors running around demanding people show passports to eat inside a restaurant, you're going to give people know a lot of this stuff is stupid. That will then they start questioning everything. Well, maybe the vaccine doesn't work. Why are they doing this? Why are they saying this about Providencetown if it doesn't work, if it works so well? And I think that's the problem here. And, the Biden administration has been horrible in messaging. And the CDC chief, Walensky, it's just, she might be a nice lady and a brilliant scientist, but she's horrible in messaging. And I think the same with Fauci. I don't think he's a very good messenger right now on this stuff. They should turn it over to guys like Scott Gottlieb and Marty McCary and Monica Gandhi, and they look at this realistically. And I think that's a problem, and it's going to be a problem for the economy. Maybe we won't get inflation long term because they're going to shut everything down again, and people are going to be afraid.
Okay, all right. That's where we go. So, all right. That's the key. And I mean, the market isn't set up for another lockdown. And you hear everyone saying, no matter what's going on, there won't be another lockdown. But yet I've heard things from like Scott Minerd, who fears a stock market correction, who talks about lockdowns. You really think we're going to lock everything down, or things are just going to stop functioning because people aren't going to know what to do, and there's going to be anger, and businesses are firing people if they don't get vaccinated? It sounds like more social unrest to me than a health issue.
Yeah, I think there is a politicization here that's making it a lot worse, and that politicization is, what we had last year with Trump was almost even though he did a great job at Operation Warp Speed, obviously. I mean, you got to give him credit for that. That was amazing. We had a sort of denialism that was rampant. What we're having now is this sort of nanny state. We know better than you. You got to do this. You got to do that. The sky is falling when it's really not falling. And so those mixed messages, people just don't trust anything then. And then they
are we going to get an infrastructure bill? Let's switch gears just a little bit. Some bipartisan, some Republican senators supporting it, even McConnell. But, I never thought it was going to be the progressives that would kill it, but probably can't get through the House, right?
You probably, unless if they put conditions, their left-wing conditions on it, it's dead. Then it's dead. Yeah. That's it. And McConnell will not go that far out in the limb. He's got to thread the needle a little bit on this. He's got to say, listen, I'm for roads and bridges, but I'm not for giving money for critical race theory seminars as infrastructure. I mean, you gotta. That's kind of some of the stuff is like that in this what the
Right.
Democratic wish list is. And the Republicans I taught, he's under tremendous pressure, not to sign this. I mean, I see the commentary. It's basically he's under pressure not to sign this one. And it's what I found interesting, to switch gears a little bit. Joe Manchin made some comments, a tweet last night. Did you see this?
About Paul?
Yeah, wasn't that fascinating?
I don't know. We've been talking about it for years, but it's fascinating that a senator,
A swing vote senator, like
yeah,
an important
would do
senator,
that.
maybe he's the most important senator.
Yeah, he's wielding it too.
That, to me, that could be that's a game changer here with the market. If that means he'll have to
Well, you
move
think
faster.
Paul doesn't Paul? I think Paul's going to listen to Yellen and Bernanke rather than Manson. What do you think?
Yeah, but he's
he came in as a hawk.
Biden's got to listen to Manchin on a lot of stuff.
Yeah,
he's like a key for him. Maybe this is some accommodation occurs here. I just found it fascinating that he weighed in on this. I've never seen that before.
Really?
I mean, you see the hawks. I mean, you see he's like a moderate Democrat, who's worried about interest rates being too high. You know what I'm saying? Oh, too low.
Too high,
sorry.
too low. Yeah,
too low. I mean, usually you just don't see that. I mean, I wonder if it gets any steam. It's something to watch.
Okay. Well, so is whether or not Powell. I think his term ends in February.
Right.
And what I'm hearing is that he's probably not going to be renominated. That Brainerd is going to be his replacement because her progressive thinking is more in line with Yellen. Are you hearing the same things?
Yeah, I've always heard she was on the bench waiting to take that job. Remember, she almost became Treasury Secretary, and then instead they put in Yellen, and they wanted us. I've always heard I remember when her name was number one for Treasury Secretary, and they always. But then when she didn't get it, what the read I got from people very close to Biden was that they wanted her on the bench to replace Powell, possibly. Much more in her wheelhouse. She served in the Fed, the whole thing. Right. And then you get a twofer. You get her there, you get Yellen, and you got you got progressive bona fides at the Fed and in Treasury. So that's what I heard. Now,
you're a good source for me. Like I check a lot of things out and different sources, and maybe you could clarify what the one of the reasons that a lot of people said that jobs were not being taken was because of the supplemental payments, and I think almost 24 states, Charlie, have ended at least the federal part of it, the extra 300 a week plus the coverage to self-employed, which never got unemployment.
Right.
I'm independent contractor. I don't have a safety net. So anyway, I'm wondering, and then they say that jobs aren't coming back even though they're taking the funds away. Are people just dropping out of the workforce? But today's number said participation rate went up 1%. So what do you think is going to happen when everyone comes off the dole?
Well, there's jobs out there. It depends. I mean, do they come off the dole when everybody when the Fed starts raising interest rates? That wouldn't be good, right?
Yeah.
I mean, that's the scary part here. The Fed futzed around so much on this thing. I mean, listen, look at what's going on with Robinhood. I mean, does that indicate a healthy stock market? This crappy stock, it's a one-trick pony, right? I mean, it's like one thing it does. It's an app.
It worth gazillions of dollars.
Is it worth this much money? It goes up to 8. It has a lackluster IPO, settles below the IPO price. That seems normal. 2 days later, it goes up to 80. Goes from 36 to 80 or whatever it was. I mean, that's like insane. That to me is, and I guarantee Joe Manchin's smart enough that he's looking at that saying, there's something weird here. And one of the weird things is the weird Fed policy that we have where it's hard to value assets in this environment.
Well, I asked Peter Bookvar the other day, Charlie, there's
no, smart
this
guy.
there's this problem about banks having too much liquidity.
Yeah.
They don't know what to do with it. So the Fed came up with a program. I think it was, they're doing all these reverse repos to sop up all the excess liquidity. And
So the
I've
Fed
never heard of
essentially
banks.
the Fed buys the assets from the banks.
Yeah, I mean, I think it may have had something to do with Dodd-Frank about having, right? And I've never heard of banks having problems because they're too liquid. It's the strangest environment I've ever heard of. So
Yeah, that was a Dodd-Frank thing where the Feds, you could park your assets at the Fed, it gets locked in there, and you get a fee on that, so you don't lend it out. During the Obama years, people used to say that's why the banks aren't lending.
Right.
Because it's it's much more advantageous just to give to the Fed or whatever, park in the Fed and make riskless money.
Right.
Yeah, listen, who knows? I'm not an expert at this stuff. I can just tell you that when you keep rates low like this, it's going to create some weird stuff in markets. And
well, would you buy a Greek bond or
no,
Italian bond that you pay the interest, or you pay the interest? A negative rates, all these assets rates. That are
I know,
negative.
It's crazy.
Yeah.
Well, why buy? That's why people buy stuff like AMC. I mean, if you think about it.
And it was going on before with the meme stocks, NFTs. I still don't know what an NFT is. Are you going to buy any? I don't even know.
Every time I hear it, I got to look it up and remind myself what it is.
I mean, what is this? So yeah, you're right. Savers have been killed for a decade, and Econ 101 has just been buy the market and hold forever. And you're kind of sensing that things are a little bit out of control with some of this stuff. You've never seen this in your career, have you? Even going back to .com?
I can go back further than that. I'm old, dude.
Yeah, I know.
I've never seen anything like the only thing I've seen kind of like this was in the bond market in the early 1990s, which I covered, and which ultimately led to the Orange County bankruptcy, because the guy was, this crazy treasurer in Orange County, was gambling with derivatives. I mean, this guy couldn't find his asshole with both hands, and he was playing in, sort of interest rate swaps and shit like that. And and he blew up the counties. This is a huge county.
I remember. Yeah.
Orange County is a huge county, and he blew it up because the Fed, for like after the S&L crisis, basically kept rates at not this low, but low. It was repairing the banking system following the '87 crash. There was cheap money, and in the early 1990s in the bond market, and I covered municipal bonds back then, and I covered all sorts of bonds, but I started focusing on municipals. Particularly not just the balance sheet side, but the scams and everything, and the politics side of it. And I remember people were engaging in all sorts of derivatives. It was one thing for New York City, which had incredibly smart people working in city government in the budget office who, came from Wall Street essentially and worked there and understood all these derivative products. But all these guys were playing in this stuff. There was some guy from some financial advisor would tell a school district in the middle of Pennsylvania to do one of these crazy derivative things.
You would have thought, Bill Gross was in Newport Beach. He could have, maybe was giving the guy advice.
It wasn't him. Guy. I know who it was. It was a guy named John Gardner Black, who you never heard of. But I covered this thing years later. These municipalities were starting to blow up. And the biggest one was Orange County, and that's still there. But that was a bubble that was popped by Greenspan. He started raising rates because he knew there was a huge bubble in the bond market, and shit started to hit the fan. Orange County was one of that. So part of that shit that hit the fan, and it was pretty nasty. That's the only thing. There's my analogy. It's then.
Okay.
Even that's not as crazy as this shit.
What would be do you have an analogy to the meeting you went to with all the high-tech firms? What was the name of that conference that they had, Charlie? Where you?
Oh, you mean Allen and Company?
Yes, 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 and that none of the billionaires were in good moods. They hadn't taken their space flights yet, and you were having a hard time even being able to ask them a question. Have you ever experienced anything like that before?
They do it every year. This is not just tech.
Yeah.
This is media and tech. It's a huge.
Okay.
Now, I get the security. There's more billions
Yeah.
per square foot there than any place in the world. I mean, Bezos was there. Bill Gates was there. I mean, you kind of see them. They're not far from you, and people that it is CEOs are there. The head of Comcast is there. Sherry Redstone is there. I believe she's a billionaire. She runs Viacom CBS. So I get the need for security, but this was locked down in another way, and I think a lot of it was the fact that they know that. The tech guys in particular know that they got bullseyes on them. I mean, I've never seen an administration put more people into key positions that have a stated animus against Amazon and Google than this administration. I mean, I'm not saying that they don't deserve scrutiny, because they do. They're really powerful. These are the most powerful companies in the world. And they're like modern day robber barons to a certain extent.
It's like the Gilded Age. A lot of people are comparing this to.
But, you have to prove, in my view, that they're causing some harm. The standard that of antitrust for years was not that you're just too big. You're too big and we can demonstrably show that you're hurting consumers. And I don't see that being showed right now. We are taping because of tech. We are doing this right now for free.
Right.
We are actually transacting ideas, helping your viewers make money.
They're pissed off because they don't pay any taxes. So they want to, maybe they'll be easier. They'll be more easily taxed if they're broken up.
But they do pay taxes. They don't. As a person, they get their salary via capital gains.
They're talking about corporate tax.
Yeah, they pay taxes.
Okay. Well, a lot of them show that maybe 1%. They're because they're able to set up overseas. There's so many strategies that I have no idea what they're doing. But do you think that we're gonna, they face trouble because they're some of the highest concentration in the market, that if they had problems, like Amazon had a very bad day last week after earnings.
I know.
And I'm looking at a lot of the FANG stocks, and not many of them are making new highs with the NASDAQ, and that's where most people's money is. And
I think Amazon's got to finally do a split or whatever.
Yeah.
I mean, that's been in the waters. I've been reporting that's out there for a long time. They keep not doing it. It's just so obvious. They need to do that just to help. It would help the share price.
Okay.
Because it's apparently, I'm not an options expert, but I know you can buy what do you call it, fractional shares.
Oh, yeah.
So people say, well, why do you need to split it if you can buy fractional shares? But can you do options with fractional shares? I'm not that good.
I have no idea. I really don't know. I don't know. But we've covered a lot of ground. But I get the feeling from the start of our conversation that your biggest concern is Delta not peaking out like it did, like it's maybe in UK, and it peaked out on its own in India, right? India was that even if it's peaking out, we're going to shut down. We're going to shut down. You think Biden's going to shut it down?
Yeah, my concern is the public policy response is going to be over the top. I mean, let's be real clear about India. People were dying in the streets.
Right.
Okay, but that's not happening here. And by the way, quite frankly, if you don't want to get vaccinated, my view is roll the dice, die. It's not my fault. At some point we can only say you can only do so much. That's a kind of there's something called the Constitution. On the other hand, you have no First Amendment right or constitutional right to a job. Jeff Zucker firing those people for not getting vaccinated. I mean, he's within his rights to do so.
Yeah.
And you know, I would like to
Well,
know.
I mean, you know, look, I remember, you know, guys from my generation would have a little scar on their shoulder
Yeah, I do.
from all
I
the
do too.
vaccines they received as a kid.
Yeah, me
Okay,
too.
and you know, and I would assume that was mandated because you know you weren't going to be able to go to school or anything without your vaccination records. So there was a time where it was mandatory, and the public accepted it because they trusted. Isn't that the difference?
Yeah, that's a great point, Dale. They don't trust government, and the reason why they don't is because we went from denialism last year, a huge degree. It wasn't total denialism. I mean, Donald Trump gave us a vaccine. You got to give him credit for that. It was an amazing bureaucratic feat that he just plowed through the bureaucracy and did what he did. And he did it against people like Fauci that were running around saying, oh, well, 5-10 years. So let's just stay inside for the next decade. You know, he did it. And, but the messaging was very.
Thank God he did something.
Yeah.
Okay.
And now we got these people. We have these people that are just insane. They're telling you to wear 10 masks. They're saying, let's lock inside. Let's do this. I mean, they're crazy. And they're overplaying the impact of Delta. And I mean, again, go back and look at the real thing, what really happened in Providencetown. That was a key event. That event spurred the mask mandate. Right. It was not the catastrophic situation that was described by the CDC chief. It was actually quite benign if you go back, and it showed that the vaccines work generally. Most people tested positive. A lot of people tested positive, 0 symptoms or very mild symptoms. And by the way, now they got antibodies to Delta. I mean, and that was people packed in close quarters. I mean, that was that was like a party basically. So I'm just saying that, you know, if you're going to go to the extremes, cause people not to listen to people in the middle. And if I were anybody here, if you really want to understand Delta, follow Marty Macari on Twitter, follow Scott Gottlieb on Twitter, follow Monica Gandhi on Twitter. People will criticize me by saying, oh, Scott Gottlieb, you know, he's on the board of Pfizer. Yeah, he was, but he also worked for Trump. And he's a doctor, and you can see he's level-headed. He doesn't underplay, doesn't overplay. And just, you know, those are the people I listen to. And I feel it was better doing it. Listen, when I got this cold, first thing I did was I said, it's just a cold. I know it. I looked it up, you know. My wife said, you better get checked. And I did. I went and got checked. Okay. You know, we could survive this, you know. And if I had a breakthrough, I was working out. I was throwing around weights with a breakthrough. It was okay. You know what I'm saying?
Yeah.
I would lock down. We just got to get through it. We got to ignore the lunatics on both sides.
All right. Well, TGIF, Charlie, if I had a mug, I'd you know, I'd clink glasses with you, and you know, all we could do is you know, hope is the oxygen that keeps us going, right? So
I think so.
It doesn't work well in the markets, but we all need to have hope. And you know, it's a pleasure talking to you. I hope you feel better, buddy.
I'm gonna go running right now.
All right,
if you notice, my voice is coming back at the end of the broadcast instead of the beginning.
All right, Charlie Gasparino, the animal, nothing stops him, and it's always fun hanging out with you for 30 minutes, buddy.
Anytime, Dale. Anytime. We'll talk soon.
All right. Charlie Gasparino. Follow him at C Gasparino on Twitter. Watch him on Fox Business, and read his great articles at the New York Post. Adios, everyone.